Good afternoon, Growth Summit. Welcome to Webit. If you don't know where you are, we're at Webit in Sofia, Bulgaria. For all those of you in the back, if you could raise your hands. Raise your hands if you can hear me. Raise your hands in the back, far and wide. I'm pointing at you two in the back near the Netera flag. Put those hands up. Put those hands up, Netera. I believe in Netera too. This is Webit. We're in Sofia, Bulgaria. Grab a seat. So come on over to the growth stage. This is Startup Summit. We're gonna have an awesome discussion, some awesome panelists about early stage investing. Some of you probably run startups in one capacity or another. Come join us. White chairs, there's a few seats left. As you can see, just a few seats left. And one important thing, I don't want anyone to confuse this with the growth stage. The growth stage is just outside this building. It's easy to identify where you are, just so you can feel it. Inside here, this is the growth stage. Well, seeing that we have all the seats filled, my name is Jordan French. I'm largely a journalist from New York. Executive editor and founder of Grit Daily News. We cover all things brands, how, when, and why they change. I'm also on the editorial staff at thestreet.com. With me are some awesome panelists to enlighten everyone, a bit more coach along in a very participatory session. And what I mean by that is I'm going to come down. You're going to have a chance, just like me, to ask them questions. That's right, they're all in the hot seat. They didn't know that before this either, so it'll be extra exciting. I already know this audience has questions, and let's make sure y'all can see me too, and we're gonna get started here. So to my immediate left, Marissa Todd, thanks so much for joining us with Code in Theory. Gwendolyn Regina is here with entrepreneur, first and last but not least, Dr. Nikolai Shetkin is with us as well. From Matchmaker Ventures. Let's jump in, and Marissa, I want to start with you first, just to lay some foundation. When you talk about investing for the uninitiated, there's more than a few categories. There's just a sea of startup founders in front of us. If you could first lay some foundation and distinguish, what is growth investing as it differs from other stages of investing? Paint that picture.
Well, to paint that picture, I think what we really think about is looking at companies that we believe in can build a multiple and really beat out the competition in whatever market we're looking at. So my background personally is being inside of high growth companies and helping work with the venture capitalists to really build their product roadmaps, find the trajectory, and then grow the companies globally. So I spent a lot of time first in Silicon Valley, and then I moved into New York, and most recently have been in Europe, where one of my latest companies, Farfetch, went public in September, which is super exciting. But really, I think the biggest thing for us is we look at the team, we look at what the market opportunity is, and then we really look at how strategic we can be to basically smash the competition.
Certainly, and you mentioned team. Gwendolyn, you've been on some of these, fast-growing teams. One of those was with Mashable entering their market. It's a very accessible name. A lot of people can understand. Can you unpack that for us? Because there are certain characteristics to that team that made it successful.
So I will take a short step back as well as quickly introduce myself to give some context. So personally, I've been involved mostly in early stage. As a founder, having started my own company and sold that company, I've also been investing for 11 years in early stage. But that experience that Jordan spoke to was that I spearheaded Mashable, which back in 2015, so at a point in time was one of the leading digital media companies in the US. I spearheaded an expansion into Asia Pacific, so looking at markets like Southeast Asia, Australia, and China. So that was a growth stage startup at that point in time where it was primed for international expansion, and it's really about let's look at which new markets we can develop in. So having done that experience as well as my experience from early stage, it's super different, right? From an operational perspective, you're talking about when I was a founder, you're trying to find product market fit. you're slaving every day. You know, as a CEO, I was worrying about P&L and whether I can make payroll, right? Whether my receivables and cash flow is the same, which is not, for example. But in my experience in Mashable, it was much more like, okay, where can I innovate? Where would be a good place to kind of place our resource, to which market to expand to. So it's a different set of resources that you're looking at, different set of decision-making variables that you're kind of working with.
And certainly, like you mentioned, product market fit. Nikolai, we know from your past experiences that you've had to perhaps resuscitate or doctor a few that have sort of not found that quite well. Could you explain, the importance, why is finding your market so important for an early stage startup?
I believe, like always, most of the founders, they are very me-driven. They come from a very much perspective, I am the greatest and my product is the greatest, and if you don't get it, you're an idiot. But you should definitely procure from me. So that's a rationale, and I'm actually surprised because even we focus on late seed, Series A, Series B. Even the level of misunderstanding about the customers and what the customers want and why actually the customers are procuring from your product is surprisingly or actually scaringly low. So I do believe that the earlier you're out there, the earlier you get actually really market feedback and really have a proof of where is really the value, how are my customers using it. We work with one startup and they, kind of the way it's set up, they don't have any information about how the customer uses the product, and we had to really force them to find out actually how the customer is using the product. So I think it's often about, me and not about, hey, which value do I create for you?
And let's pick that apart because, you refer to the me entrepreneur, and one of the things that you work with, Gwendolyn, is interestingly, entrepreneurs before they even launch their product. Why go that early at Entrepreneur First? Why invest in people before they even have something to sell, much less even markets to find a fit?
Yeah, so ultimately investing, we always say, is markets are one, but people are the most important. So Entrepreneur First, the fund I'm with right now, we take that to the very extreme. So we've combined that theory, but combined with a traditional financial instrument. So we invest in individuals. We pay you to start up for the first 3 months. Not reimbursable. After 3 months, during the 3 months, we help you find a co-founder. After 3 months, with the new co-founder and a new company, you pitch to us and we may invest in you. So the idea is because we believe that many people in the world, you are talented, you're ambitious, but you don't really know kind of how to start, where to go. Finding a co-founder is one of the hardest things that people can do. So essentially investing, again, we are really taking that investing into people to the extreme.
And you've had some success, though, just to illustrate the point. Could you share perhaps some of the bigger exits?
Yeah, so one of our most talked about exits is Magic Pony, which is an image AI. And they were acquired, so they met at Entrepreneur First in London several years ago. After just 18 months, 1-8, they were acquired by Twitter for $150 million. So we've shown over the last 8 years, we've kind of proven our thesis that it is possible to take an individual, put them in a room with a bunch of strangers, and create companies.
And if you could just share, because when I was listening, we were all listening, didn't earlier, but everyone in the audience is thinking this. What is the average amount that Entrepreneur First will invest into a pre-idea?
So we are across in Europe and Asia. So since we're in Europe, we pay the founders, I'm based in Paris right now, we pay the founders 2,000 euros per month for the first 3 months. At investment committee, after 3 months, you pitch to us, we may invest in you, and the investment is 80,000 pounds for 10% of your company. So it's a fixed kind of structure, and everyone buys into that, essentially.
Certainly, and back to you on this, Marissa. A lot of the audience is working with particular product, but they haven't quite found the fit. It perhaps harkens back to the adage that humans are really good at finding problems, but not necessarily the best fit solution. But that's where Code and Theory comes in. So for the uninitiated, can you tease that out a bit more about what you guys do?
So at Code and Theory, most people see us as a traditional digital innovation agency where we're building platforms and products for Fortune 50 companies. What they don't know about us is that we help launch a lot of startups. We might have an entrepreneur come to us like you do. They've got a great idea. It might have a product market fit. It might be a lookalike product, but they want to know how can we do this better, more strategically, and how can we dominate the market by really innovating, because that's where it comes down to, is how do you innovate. And so we've worked with people, in particular we've launched a hotel app called One Night from the ground up, where we had a very famous hotel owner come to us and say, I want in this hotel app game. I've got lots of money. How are we going to do it better and differently? And we built everything from the ground up, from the app to the branding. And with all of these kinds of projects, obviously we take investment in the company. So we trade design work for equity or a swap of cash and equity. We've had other cases where a marketplace will come to us, very competitive fashion space, and try to figure out why they're just not working as well as their other competitors when all of their product features are the same. And so that might be something where we look at the business model and how can we innovate on the business model and think of new ways of driving marketplace transactions. So, it's really taking everything I have of 20 years of building high growth startups and then applying it in new ways to ideas that might need they have a product market fit, but the business model doesn't fit, or they just don't have that competitive edge.
Certainly, and for the 400 people that are working at Code in Theory for the 5 or 6 cities out there, what is the most common sort of species of problem that they're looking to help those businesses overcome? Are they typically actually marketing problems in disguise, or is it really technical in nature?
I would say it's less marketing and more technical and innovation. So really, also we really look at their roadmaps and really tear them down and look at it and say, should you really be building this? Is this really going to get you ahead? And so I think that's something that's really different from what most agencies offer, is we really do heavy product consulting, and that comes from a team of us all having deep experience, getting torn down by our VCs saying, why are you building this? Is this really going to help you? Why should I give you your Series C? And so that's exactly what we do.
Sure, and what isn't so obvious is your work with big enterprises like the sort of JP Morgans of the world, if you will, other Fortune 500 companies, in other ways you can iterate that, but that actually relates right back to what you do with startups. You're able to borrow some of the concepts and then apply them to startups. So can you share on that?
I think the biggest thing is we really help them think big from the beginning. We also know how to make them think efficiently, and every move that they make, making sure they're getting a return on that. So we're very data driven. We set KPIs. We even think about what we call micro interactions and looking at things beyond the standard funnel, and what are those KPIs that will really let you understand and hone in on where your product's working and where it's not working. And so I think that's something that we're really trying to redefine what KPIs are in the digital world in general. We've moved way beyond Google Analytics, and so those are the things we really think about.
Yeah, and just to style part of that conversation, it's about data, and what's important is that's not necessarily money. And so to you, Nikolai, I think one thing that you've wanted to stress is funding or that resource isn't necessarily actually the most critical for a company. Can you explain what you mean?
I think, of course, obviously, when you always hear two things, right? When you hear investing, it's money. When you hear venture company, it's they give me cash and they take equity. We are a Matchmaker Ventures. We are a venture company and we invest, but we don't invest cash or we don't take equity. Particularly, this is now back 2014, it's when we started the company. The point was, and particularly in Europe, we are 28 countries. Yes, we are one European Union, but we're 28. And the challenge, which in particular European startups have, is if you're born in Austria, I live in Austria, right? Your market is 8 million customers. And then you go to Germany, which is same language, should be similar. We actually have pretty much the same laws. Or if you go to Switzerland, same language, almost. And then again, it should be the similar. So, but in reality, every market is itself.
With subtitles.
Yes, with subtitles. You will need them often. I need them often. No, but bottom line is every market is so difficult, and kind of particularly in B2B, scaling is so challenging. You always need to know the market. You need to know who are the relevant people, and you need to build trust. And so what we do, we invest actually exactly that. We scale companies who have proven that they can do it in the home market, and now they need to scale fast. And we believe that's a very repetitive task. And in return, we actually don't work with equity. We work actually with a revenue share. So meaning if we create impact for you guys, then we take a cut of that impact, which we believe is much fairer. And at least I'm not saying investment is not required in terms of cash, but I also believe that in particular Europe or markets which are not as big as the United States or China, this initial scaling is probably even similar as important.
I'm going to add on as well. I mean, you look at your experience, Nikolai, right? So I think when companies you're getting bigger, especially when trying to think of expanding international markets, there are a few ways you can go about it. One, you hire someone internally, like what I did for Mashable, or you work with Nikolai's company, where you have a full team who knows the market, you've got your business, your playbook down pat. So there's different ways of scaling.
Yeah, certainly, and on that note, because of the limited amount of time that we have, I said that this would be a very participatory session. I'm going to pop down this runway and hand the microphone over. For those of you who do have questions.
Sashay your way down.
Yeah, well, I could slide my way down, because I don't think this one is on. If you could just raise your hand. We have an awesome panel with us. They've had a lot of experience. Just raise your hand if you do have a question, and then just say your name, okay?
Yeah, my name is Vetumir Kalitsov. So the lady on the left. So you said you're measuring the direction of the startups you are investing in based on a micro KPIs. Isn't this too restrictive to the creativeness of the teams?
No, not at all, actually, because what we're trying to do is we all, quite often we look at big picture KPIs, but when we realize that if the startup really starts focusing on what they want to do and launch and do that really well, and instead of trying to launch 100 features, we want to make sure that we can move people through this part of the funnel, or we want to make sure that this feature is working 100% before we move on. It helps with being efficient in your engineering building, getting quick response. So again, we all know that we like prototype, test, and iterate. I don't need to tell you that, but we really want to look at it in a way that's going to drive ROI and drive your next step in growth. So we really map that against what all the milestones are in the business. So.
Yeah, certainly. Let's see if we can get a question on this other side. It's like a wedding here, so. Okay, this would be the groom side. Just say your name.
Philip, I have a question as well for the KPIs. What would be an unexpected KPI that you have been very successful with?
That's a great question. I can think of successful ones. I mean, here's one. I have a better one. I have a story of two KPIs, two companies personally involved. It was a like button. The like button on one company drove incremental 30 million in revenue. So this is liking a brand, e-commerce. 30 million in incremental revenue in a year with the same design on the same product detail page. That same button failed completely in both luxury e-commerce markets, completely failed, which did not make any sense at all, and we had to rework it. And so I've seen a lot of strange anomalies like this throughout my years, and so that's why it's like, instead of seeing our people moving through the straight conversion funnel, what are the things they're doing that's driving conversions? Another great one in Marketplace is we knew for every person this is another one, who liked a product post, we would drive 2 more registrations. So we started pushing people liking things instead of trying to buy. And this is an example of looking at the micro conversions instead of just trying to push through the conversion funnel. So that way we were driving more members registering, which is what we needed for growth in our next round, not driving conversions. So those are the kinds of things that we look at. It's a little bit different and it picks it apart, but it's really why we dig in on that and find the trends.
And to distill that a bit more, Marissa, it's, like you said earlier, it's about data, but then also, if you don't measure it, you definitely don't know which direction to go in.
Exactly.
And I think there's 1 or 2 more questions in the back. We definitely have time for perhaps 2 more questions. Make our way back down the aisle and just say your name.
Leah Hunter. Hi. What is one piece of advice you have on sniffing out a winning company? Because I know a lot of people do spray and pray investing, but maybe you got a tip for finding the good ones.
Over the years, 13 years, I've looked at many companies, both from a media perspective, that's my background as well, covering them as well as investing. And for me, pattern recognition over these 13 years and over these companies, a few things. How well they know their numbers, how well they have a strategy thought out, and not just having the ultimate vision, but able to map out kind of the steps. And we know that the steps may change. But the key things they're able to articulate to me that, you know what, these are blah, 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 these are what we do this, and then operationally we'll be profitable here. I love hearing that. But ultimately, it's really, again, the team. And So all that data, the concrete vision and concrete strategy feeds in, but ultimately I need to be able to trust the entrepreneur. So we were talking earlier, you and I, about trusting a gut, and I use a lot of that, frankly, personally as well.
So trust your gut. Speaking of which, I'll trust you with this microphone. Just be sure to say your name.
Hello, my name is Mike from Lumen. You talked about having a vision and having the steps there, but things change. And sometimes the plan that seemed really good 6 months ago suddenly is no. How do you handle sort of conflict with your client, with the companies that you invest in, or if things change, how can you be sure that you're changing the plan in a way that's going to be good for you and for the company?
So they need to be experts. If I know more than them about their industry, then they are the wrong people I invested in, right? So, and yeah, I've actually debated and disagreed with quite a few of the portfolio companies before, and I try my best, because if I think something, I have quite strong opinions, and I try to share them and persuade them. So for me, it's about focus, for example. So it's really a conversation, it's a marriage, and I really try my best to work with the founders. Like, I had a 2-hour meeting with all my portfolio companies over a call in Singapore last week, having again next week, for example, connecting them in the meanwhile to other investors. And yeah, so it's a process where we work together to try to figure out what's the best way. But ultimately, it's their marathon to run, because they have all the information and data. I have some of the information, but I'm not running day to day. So I trust them ultimately.
Maybe just to add on that one. I believe one of the key points, what we do is, we work in industries which we really understand. And I think over time, what you build with your portfolio companies is a very deep level of trust, and you also need to deserve that trust, right? I think also just because you're an investor and you're given money doesn't give you the right to do something. So yes, we invest our time, which is the most precious anyway, which we have. A lot of time, a lot of passion, and when the startups see that when you have it and you're talking on a high level bullshit, hey, this is the number, but you really understand what you're talking about, then you can have incredibly valuable discussions. And we do see that as that kind of in-depth the startup team, but as long as you're close enough to really understand what they're talking about, we regularly have those workshops where we sit together for a day, 2 days to challenge and align and readjust the strategy, which happens every 3 months, be honest. And even in that stage still, we change how we work every 3 months.
Certainly, Nikolai, thanks for that answer. We have time for just one more quick question. Be sure to say your name.
Hi, Tal Zohar, Ardo Data. I wanted to ask about the media thing. We're currently in the process of raising capital for an AI company that improves the way marketing, the data behind marketing technologies is being done. And one of the things we hear from VCs from time to time is that it's a crowded market. And yet from our clients, we don't hear that. So we hardly hear any client saying, oh, someone else just pitched the same thing. How do you distinguish? Because that's one of the things I'm finding it hard to explain to VCs. How do we distinguish between a crowded market or not crowded market within this marketing environment?
Crowded, for me, it's neither good nor bad. I mean, crowded means that there's a market, there's money to be made, so that's always good from an investment point of view, right? Not crowded, then you're like, are you too early, right? So ultimately, when a company comes to me and whatever, maybe marketing tech, advertising tech, media tech, or in another kind of industry, but it's ultimately, again, do you know something that I don't know? And then you're putting that into practice and execution? Or is there a special, again, like unique process in which you are managing your resources? Because ultimately, yours is human resource as well that you put into play together with tech, right? It's about how are you harnessing that in a very smart way. So it's not about being crowded or not. It's about how are you smartly using your resources to get your clients and to make yourself profitable. Do you want to add something else?
I was going to say the biggest thing is really how do you distinguish yourself different from the competition? And I think, I've seen an experience, again, because I have a lot of expertise in marketplaces, they're easy, everyone knows how to do them, but how are they different and why are ones, popping up and being more popular than others? And it's really what does that distinguish you from all of the rest? And is it a different business model? Do you have a zeitgeist of a type of user that is all coming onto your platform? You know, you need to really be able to articulate that, because that, yes, exactly. A crowded market doesn't mean that they're not going to invest for the exact same reasons you pointed out, but you really have to be able to articulate why you are different and why you are going to succeed beyond the rest of them.
And just superior execution.
Speaking of execution, differentiation, the zeitgeist, this is Webit. This is the last panel, at least that's what they told me. At this stage, this is the startup stage. Hope you enjoyed this panel, but first, big round of applause for Plamen and Yella, who put together the Webit, but for them, we would all not be here. So big round of applause for them. One will never get enough praise, and that's the AV guy over there, who never gets thanked, but certainly will now.